What is up, traders? In today's video, we're going to discuss the EURUSD's move along with the dollar, Bitcoin, and the S&P 500. So stay tuned. What's up, everybody? My name is Heath, and this is Trade Talk. So today we're going to discuss a little bit about what happened today in the euro. But first I want to say, if you ever hear me, if you're a newer trader, this is aimed at newer traders, not the guys that's been doing this for a while. But if you hear me talk about I'm trying to take a scalp trade, looking for that range expansion on a weekly time frame, basically this is a range expansion on a weekly time frame. Today is just Tuesday, so the bulk of this candle's range came from today's price action alone. And I'm going to show you exactly where I entered the trade and where I was aiming for. I was aiming for this high, this ultimate high of this range that we've been in for multiple weeks here. And I was looking for price to at least tap into that to get the liquidity to then move whichever direction it wanted to after. See, the thing is I can teach you to learn how to trade into the liquidity purge. I cannot teach you what's going to happen after that liquidity purge. For that, we need more data. So this is why I always take 2/3 of my position off in front of the area that I'm looking for liquidity to be purged. Now, dropping down into a lower time frame chart, I'm going to show you at what I was looking at. So yesterday we pushed up here and made a high, and then we kind of retreated out of there pretty hard. If I show you on an 8-hour time frame, you're going to see this bearish engulfing candle. So traders like to trade these for continuation. Usually if there's an engulfing, whether it's on the bearish or bullish side, traders love to trade those for continuations. I do too, depending on where price is and what it's doing. However, with this liquidity zone right here that I was looking for price to tap into today, I was more still on the bullish side of the chart. So I was looking for bullish entries. So on the 15-minute time frame, we sold off and then we came back up. So this was the Asia session, the Asia session last night. And basically what I was looking at is you can see this pop up here. And if I go get a little line indicator here, you can see that this area held as support, sold off, came back into the area, it held as resistance, but then we broke through, came back down and retested and resumed out of there. I entered this trade on this candle right here. So I was a little early, obviously, because it traded in a range for about another hour or so. And I had my stop below this area here. So all in all, I think the stop was roughly, I think I entered right about here. So the stop was like about 8 pips. And I was shooting for 40 pips to the upside, being right here. And here, let me just do this. Here is the actual photograph I took in the chat room this morning. As you can see, my entry is delineated. Yes, I did block out the position side because, as you can see, this is a real account, live money. And I am not a lawyer, and I just don't even want trouble with that, so position size blocked out. You can see that this thing has moved up, or up since, but you can see where my position is. I took the entry on this candle here, stopped below that low, and then had my take profit set at 2/3 of the position size right there. So when price pushed up in, automatically took me out of trade. I moved my stop to break even. And we are pushing further. Now I still have 1/3 of that initial position size on, and the stop is still at break even, and I will let that ride. Now, this morning in the chat room, I brought up the fact that I was watching this area here for a support hold this morning. This is where we were. We were actually coming down here, and I alerted out to the chat to watch a support hold in this area here. So I will bring over this real quick just to show you with the timestamp there, looking for SPX to hold. And it did hold. We got a nice strong bullish push out of there. as delineated by this candle here, closed on a nice strong basis, and then we pushed up, broke through the all-time high, which that's where I would have my profit target, set the stop to break even once that's purged through, and now we're trading sideways. We did sell off. We did go back up there and sell off since, so we're kind of waiting to watch this to see if we get some closures lower on an 8-hour time frame. Bitcoin pushed up, made a new all-time high on Coinbase's chart, so I'm now pretty confident that Bitcoin has made an all-time high, a new all-time high on all charts or all data feeds. Not 100% certain on that, but I'm just assuming. And as you can see today, we've had a pretty nice sell-off / correction. So basically these lines are where I'm looking for if Bitcoin continues to move lower. These are the areas that I'm looking for it to find support, at least initially. How did I get those areas? I just take them off of the opening of the bearish candles. So every down close candle, I basically set the line to the top of that down close candle, which would be the opening price. I don't really include the wick on this. It's just more or less a gauge. It's not going to be an exact thing. It can go through or a little low or whatever, but that's how I get those levels. So I'm assuming Bitcoin will find support somewhere in here, and we will reassess later on down the road. Gold had a nice push down, and last night I was talking about it possibly holding support here because it's not able to close lower than that level on an 8-hour time frame, and you can see we have pushed back up. Now today we did close an 8-hour candle above that area that I'm watching here, but as of right now we are retesting this area. So basically what I would do if I was going to trade gold is I would look for an area where it may find support, and it's not easy to find, so you'd have to go down to a pretty low time frame. So yeah, it's already pushed down into here, so I'm assuming it's going to find support. I don't know for sure that it will, but this was a strong bullish push, and we're basically consolidating around the area that it needs to penetrate and have a strong closure through. That most of the time rings good luck for the direction going up. If you have something consolidating under a level, then you get sell-offs. Anything consolidating above or really close to the level, in a matter of speaking, it doesn't always happen, but the rule of thumb is consolidation underneath a resistance, chances are higher that it's going to break through. And let's see, what else was I wanting to look at here? Yeah, this thing is still trading in a range, so we're basically waiting for closures above this line or closures below this line. ZRX, it's getting pretty close to getting to the point to where I'm going to exit this trade. We pushed up and then completely have sold off. This is a bearish engulfing, taking out the price with another stronger bearish or weaker bearish close. So chances are I'm going to get stopped out of this trade. And the dollar, finally. We have broken out, obviously, and we are falling hard. So that's good for my EURUSD trade. Where are we going to look for the dollar to possibly find some support? Well, we could probably look for it to find support at this candle's closure, because you can see here that this line is caught there. This candle pushed up into that area and rejected and closed lower, but then the next 3-day period pushed through. So I'm looking for, if it continues to push down, I'm looking for it to try to catch support here. And obviously once it gets down there, or if it gets down there, we wait to see if price is finding support. We don't just blindly buy these areas or sell them. So that's pretty much all I got for you guys tonight. I just wanted to say, show you what's been going on. So far, I'm up pretty close to 10% on the week, which has been a great week, and we're only 2 days into the week. Oh yeah, one more thing, guys, please listen to me, newer traders. Market makers do not control price. They do not make price go up. They do not make price go down. Market makers provide liquidity on both sides of the market, meaning they provide the liquidity on the ask side and they provide the liquidity on the buy side. they also get the money between the spread. You buy on one exchange, sell on another to get that little itty bitty spread. So that's what market makers do, guys. Quit blaming market makers for stopping you out of trades. It's time to put your big boy pants on and blame thyself. That's right. Blame thyself because you're taking trades at the wrong places and you're getting stopped out. So no more blaming the market makers and no more blaming market manipulation. Okay, guys, I can help you through this. We're going to be fine. So thanks for tuning in. Make sure you like and subscribe if you haven't done yet, and we'll talk at you next time.